Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on commodities. We're going to look at the dollar, gold, oil, natural gas on the weekly time frame, starting it off, and then we'll zoom in. So we have a bearish reversal candlestick on the dollar, and we closed at the low of the week, showing that the bears still have momentum heading into this coming week. And we're watching the daily uptrend, which is still intact at this point, but 95.68 is the important level for the bulls to maintain that daily uptrend and keep the bulls in control. We'll be watching if we bounce while holding that level. We'll be watching for the potential of a head and shoulders pattern where we would bounce and then break the higher low pattern. So that will be a possibility to be watching for because we have pulled back a decent amount from the high of this move that would allow for the potential of that right shoulder to form. So overall, bulls still in control. We will look for a daily higher low to start the week, and how it responds to the price action after that will be very telling to see if it does roll over and if we do need further weekly consolidation, in which case the next support would be 94.79 that we would be looking at if we were to lose that daily pattern. But one day at a time, we have to see a higher low, which is more likely than not because we've consolidated enough at this point. We would have to see the 4-hour RSI get pretty oversold to break 95.68 without a short-term bounce before getting to that level. Gold on the weekly time frame is a bullish reversal candlestick inverse to the dollar. So we have the higher low forming on gold at this point, and we have to see the daily trend change here as well. So we're looking for the odds that it's most likely going to set a lower high compared to 1237 and all these tops up here. We'll look for the lower high to be set. The bulls will have to consolidate and form a higher low and then break the lower high pattern to try and get to the recent high of 1243. So again, just like the dollar is a bit extended to the downside and we're likely to hold the daily uptrend, gold's a little bit extended to the upside and we're likely to hold this little daily downtrend on at least the initial test. We will need to see a higher low form in order to have the momentum to get over that level, again, in the most likely scenario. GDX, looking at the miners, the weekly time frame forming a bullish reversal candlestick here as well. Key level for the bulls to break to switch the momentum and change the daily trend is 1980. If we cannot break 1980 Monday or Tuesday, we'll have to consolidate and form that higher low. And this is the scenario where we're looking for an inverse head and shoulders pattern with the left shoulder, the head. If we can't break resistance, we're going to pull back and look to form a right shoulder. And then we would have to break those lower highs for the bulls to change the daily trend. So pretty much the exact opposite of what we're looking for potentially happening on the dollar with that head and shoulders pattern. We're watching for the miners to potentially see daily inverse head and shoulders patterns. And GDXJ weekly is more beat up. So we broke key support back here. And if we look at the daily time frame compared to GDX, it's a lot further to go to get back up to 30.30. At this point, we pretty much need a 10% move. And we look at GDX, what we need to get back to 2051. And it is less significant than a 10% move. We only need about a 6-7% move. So the same setup is there. The bulls are just a little bit more beat up. So we would have the left shoulder, the head. If we are unable to break this resistance of 28.51, we will then look for the right shoulder to form in the same pattern that we just pointed out on GDX. So worth keeping an eye on miners for that little healthy daily higher low, and perhaps middle towards the end of the week, we look for the bulls to show back up and try and take out those resistances. Oil, weekly time frame, still looking for a bounce after 6 red weeks in a row. And the daily time frame got a bounce started, but this is a potential bear flag at this point. It's a very weak bounce, not giving the bulls confidence at all. We saw 12 red days in a row, and the 3 bounce days are not even getting back the last red day at the bottom of that dump. So anything that we bounce here, we're going to form a lower high compared to 61.26 unless the bulls just explode out of nowhere. And we're going to have to see a change in the daily trend. We have all these bear flags for the last couple months or the last month here, and we're just setting up another one. So we have to be watching 54.79 key support to hold. We have cooled off RSI levels where we absolutely could see another leg down, and the bulls just want to continue by breaking 57.93 and try and progress on this bounce. But at this point, we're not going to change the daily trend anytime soon. So might have to set the lower high and then pulling back. Maybe the bulls will have a bottom fishing play with that 54.79 support, looking for the higher low and trend change to form. But at this point, hard to have any confidence as a bull in oil. Natural gas has been absolutely off the charts in terms of volatility and trading ability for the inverse and the regular ETFs, UGAS and DGAS. I took some trades this week in those names as well. And when you have the ranges so wide, you look for an equilibrium to form after a breakout or a breakdown, and an equilibrium is currently forming, but the ranges are so wide in between this move that you can see huge gains within the equilibrium. So at this point, the play on Monday is going to be watching for a DGAS entry. That's because we have our high of the breakout, which was an insane push up, almost to $5. We have the low of the dump in response to that, which was an insane dump that gave DGAS some great opportunity for the bulls. And now we're looking for a lower high to form. And if we look at it on the 4-hour time frame, we're going to be looking for that lower high to form, perhaps somewhere around 450, 460. We'll see how the week starts. But it's the kind of scenario where I would not be looking for a UGAS entry. I would either be looking for a DGAS entry or just patiently waiting for the equilibrium to break sometime later this week. So scouting DGAS on Monday, and ideally want to see trends lost. At least the 5-minute time frame lost. Losing that uptrend, we could top fish and give ourselves an opportunity and a stop level to use, looking for that lower high to be set on the 4-hour time frame. And we'll be watching DGAS. Have to be aware that these leveraged ETFs have been struggling to keep up in terms of keeping their correlations to what natural gas is doing. So UGAS has been all over the place as well. And wrong ticker. But all over the place, just meaning the range that we've seen. We went from 260, and the next day we hit a low of 105. And if you look at the 4-hour time frame, this equilibrium is a lot less clear than it is on natural gas, just because there's less trading time. NGF there does have some action during extended hours that UGAS doesn't have. And let's see if we put that up. It looks a little bit smoother. But again, we're looking for a lower high on UGAS, and the play will either be to short UGAS or go long in DGAS as we look for DGAS to give us that 4-hour high or low. And you can keep in mind, like I said, the correlations are a bit off, so it's a much different looking picture here for DGAS, and we have to be cautious of that because we have seen leveraged ETFs like XIV literally break before, and it looked for a while on Monday morning, or actually it was Wednesday morning, it looked like DGAS might break, and that would just mean that the correlations fade, and at this point, we're right back down to that support, 281. We closed at 334, and you can see that 4-hour time frame with extended hours just does not look anywhere near like it does on NGF 2019 because the percentage differences, you can tell when there's arbitrage where you can look at DGAS and you can look at UGAS, and one of our members, ChartGuys, Lori, has been doing a good job of pointing this out, where there's discrepancy between those two names where we can say, all right, DGAS should be 8% lower than it is right now if it were going to be in line with where UGAS is. So just be aware that it's not tick-for-tick correlations going on with natural gas right now. It's a little bit of a trickier animal, specifically with DGAS comparative to UGAS. So you want to be aware of that high risk and just make sure you're using stop losses. You know, there's stories out there of this natural gas move crushing people, and understandably so with all this volatility, but just use stop losses, use short-term time frames, and make sure the risk to reward is worth getting in the trade, because the last thing you want to do is get stuck in a leveraged ETF that has time decay on something that is so volatile as natural gas is right now. Hope you have a good rest of your weekend. We'll be watching DGAS. We'll be watching the bull miners for a daily higher low to form, and we'll see if oil ends up being just another daily bear flag.